Oil prices soaring, now hovering around $100 a barrel. You can see this chart over time. The last time it was this high was when Russia invaded Ukraine, and that height was at June of 2022. But I want you to look at the very end of this chart, an almost vertical increase over the last 2 weeks, an incredibly quick rise over a very short period of time. It could get even higher, experts say, by the end of March, maybe even $150 a barrel if travel through the Strait of Hormuz does not start flowing again.
The economic tremors from the Middle East are hitting American wallets hard right now. This isn't just a bump in the road. This is a vertical spike driven by real-world conflict and supply disruption. Experts are not just speculating, they're laying out a clear, measurable threat. $150 a barrel, that's not a prediction, it's a warning. And it means every single American pays more, immediately. Welcome to Partisan Pulse. We're here to expose that dangerous disconnect.
That flow of oil through that critical waterway has effectively ground to a halt. It's only a 20-mile stretch of sea between Iran and Oman, and actually only a 2-mile wide sea lane. The president shrugged off the rise in oil prices, calling it a very small price to pay for USA and world safety and peace. CNN's Matt Egan is with us now. In these prices we've seen overnight, the sharp increase, more than 10% in one day, Matt. That's pretty staggering.
Yeah, it is absolutely staggering. Look, oil prices are going through the roof. And you know, oil is a notoriously boom to bust market. But even by those standards, this is just a historic spike. Look at this. Oil prices 9 months ago, all the way on the left side of your screen. That was the last time there were tensions with Iran and a conflict. And that looks like just a tiny increase compared to what's going on now.
Wait. What? A very small price to pay for safety and peace? Tell that to the millions of Americans who are already struggling with inflation. This isn't some abstract cost. This is real money out of real pockets. It's a direct hit on family budgets and small businesses. To shrug that off is to ignore the economic reality facing everyday people.
Before the war started, U.S. oil prices were trading at about $67 a barrel. At one point overnight, they got to $119 a barrel. Now, let's look at a live look at oil prices. You can see they have pulled back from that peak just over $100 now. However, 11% increase, a $10 increase of dollar amounts. At one point this morning, U.S. oil prices were on track for their biggest one-day dollar increase in history. Now, as you mentioned, the problem is the fact that this war has disrupted the supply of oil out of the Middle East. And it's not just that the Strait of Hormuz effective closure is delaying the shipment of oil out of the region. It's the fact that oil producers there, they have nowhere to put the oil. They're literally running out of room to store it all. So they have to slash production. And you look at gas prices, $2.98 before the war started, $3.48 a gallon right now. That's the highest level since August of 2024.
If this kind of breakdown matters to you, this is exactly what we do here. This isn't merely about delayed shipments. This is a fundamental breakdown of the supply chain. Oil producers are literally running out of space to store their product, forcing them to slash production. That's documented. When supply drops like this, prices don't just go up, they explode. This is a crisis far deeper than just a blocked waterway.
This is another look at gas prices as well. Zooming out, you can see how it's just going significantly higher. Now, it's not just gas, though. Jet fuel, right? Jet fuel prices have skyrocketed. United Airlines CEO warning that could raise the cost of airfare. And diesel as well. Diesel prices, they're actually up by even more than gasoline on a percentage basis. 24% increase. This is a 3-year high. And look, this is bad news for farmers, for railroads, for trucks, and ultimately for consumers, because everyone is indirectly paying the cost of diesel when they're buying stuff. So this is a significant situation. And look, the White House is arguing, the president has said that this is hopefully just a short-term glitch and that prices will eventually crash. Hopefully he's right. I think the bottom line here is, how long does this last? Because if this is just a few days of $100 or so oil, this could end up just being a blip economically.
24% increase for diesel, that's measurable. This isn't just about your car, it's about everything you buy. Farmers, railroads, truckers, they all rely on diesel. Those costs get passed directly to you. The White House can hope for a crash in prices, but hope isn't a strategy. The market is signaling deep concern, and if this lasts for weeks or months, we are staring down the barrel of a potential recession driven by energy costs.
When I woke up overnight and prices were around $120 a barrel, there was, I don't want to use this word loosely, but there was borderline panic at the steep increase in just a few hours.
Absolutely, there's no other way to look at it.
People were on the edge of their seats for a few hours.
We are looking at these prices as attacks continue to unfold on infrastructure across the region where I am. Question is, how bad could this get at this point?
According to one trader, the sky's the limit.
We're not just talking about oil here, but we're talking about refined products, aren't we? And those products around the world are massively important to the global economy. The G7 ministers are weighing releasing strategic reserves. What does that look like? What might that look like, Richard?
Okay, so if you start releasing the reserves, of which all major governments have a certain large number, and the US has, I mean, gazillions based. It's in the poorest rock and in the mountains, in the ground in the United States. That does bring the price down, no question about it. But it is a short-term measure. Essentially, you are making it available to the market, but you're not able to replenish it. You can in the US because you've got, of course, local supply, but elsewhere you won't be able to replenish it. So the moment you release your supplies, your stores, if you will, that is a one-hit wonder. You had better hope that the overall situation improves. If you have a scenario where the President of the United States says he and the Israelis will decide when this ends, and you've got the Iranians saying no surrender, it's difficult to see this end soon. And in that scenario, why would the price come down other than through artificial means such as release of supplies?
Releasing strategic reserves, that's on the record as a temporary band-aid on a gaping wound. It might bring prices down for a moment, but it's not sustainable. With no end in sight for this conflict and the global capacity to replenish reserves limited, this solution only kicks the can down the road. It doesn't solve the core problem. We need leaders who acknowledge the challenges, not minimize them. This isn't just about oil, it's about the credibility of those in power and the economic future of our nation. Stay informed, stay critical, and we'll keep exposing the truth.